You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding Options Insider Radio Network. In addition to our Playbook program, you may have also checked out our other new addition, the Trading Tech Talk program. A lot of interest in that show in the wake of the Michael Lewis Flash Boys book and the big debate over HFT, whether it's good, whether it's bad, dark pools, are they good, are they bad, and all that fun stuff. Really heating it up on the Trading Tech Talk side. If you haven't had a chance, check it out. Trading Tech Talk, you can find it wherever this program and all of our other programs are available. iTunes, Stitcher, AHA Mobile, of course, theoptionsinsider.com, as well as our brand spanking new mobile app. You can, of course, stream instantly all the episodes of that program, as well as Option Block and every other program on our network. You can download them for offline listening. You can even fire off a question or a comment to the hosts of your favorite program. If you hear something you don't like, something you don't agree with, something you do agree with, whatever the case may be, we love to have your feedback. The app makes it really easy to do that, available for iOS, Android, even for the Amazon devices out there. So check it out, the Options Insider Radio Network mobile app in your app store of choice. All right, and joining me on the old all-star panel today, let's reverse the order a little bit, mix it up for old time's sake. Starting off with the man beaming in from scenic and lovely St. Charles, Illinois. None other than the man himself, Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program.
Both scenic and lovely. Great day in the markets. Love today.
Great day to live in St. Charles, too.
It's all even though it's a bad day, it's still a great day to live in St. Charles.
This program sponsored, brought to you by the St. Charles Tourism Board. I'll be expecting that check at the end of the month there, sir. Let them know over there. All right.
Will do.
And beaming in from scenic and lovely downtown Chicago via the way of Option Pit World HQ, none other than the greasy meatball himself, Mr. Mark Sebastian. Mark, it's been too long, sir.
I talked to you on Thursday.
I know. I'm teasing. I'm saying literally it's been too long. Stop coming on the shows. No.
Okay, good. Yeah, things are good here. Kind of a screwy day, right? You see, everyone's going to look at this day and say, oh, you know, the S&P was up 6, but they'll forget the fact that we were up and down 12. So, you know, the closing number not telling the story.
As usual, close to close, just the beginning of the conversation, not the end.
Sorry, Don.
Yes. That's an old conversation from that program going way back. But speaking of going way back, our next member of the All-Star panel does go way back, and he's got the stories to prove it. None other than the Viceroy himself, Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome back to the program, sir.
Hey, good to be here, Mark.
All right, with the gang all assembled, it's time to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, welcome to the trading block. As Alex and Mark implied there at the top of the show, it was a bit of a weird one today. The S&P, most of the major indices closing up fractionally on the day, but that's really only the start of the story. A lot of vacillating in between the open and the close. And I think we'll continue the trend of mixing it up today on the old program. Starting off today in the trading block with the Viceroy himself, Mr. Jacobson. What caught your eye? What was lighting up the old trading tickets, the trading desk over there at OX today?
Well, as Mark pointed out, it was a very mixed day. A lot of stuff moving around. We were up at the opening, down midday. Today was dominated by three names here on the desk. Ironically, Apple, Amazon, and IBM. And IBM is kind of a sleeper name that picked up a lot today. It's an idea hub name that our client base has been doing a lot of premium selling in because it's very much been in a narrow trading range. And it popped almost $4 today. So Apple with a big run up today. Amazon, they murdered it in the morning, brought it back a little bit. But here at OX, people, when Apple trades, it makes the day. It's in so many accounts and so many people, are playing it on our social site. The two stocks that people like to talk about the most. And anytime they go down, you get the folks coming out of the woodwork who go, I knew it. But the two stocks that lead social activity are Apple and Tesla. And Tesla has quieted a bit lately with the big run up in Apple. So interesting day today, lots of stuff to trade. And as Seabass said, not really sure what was going on today, but it's been that way for about a week or two where, we're up in the morning, down in the afternoon, up at the close, or Friday kind of vice versa. So interesting trading day. If you're a day trader, this was a good day for you.
Also a good day to be buying and holding that Apple. And of course, whenever Apple has a big move, we have to check in with our resident Apple expert, good old Uncle Mike Tusaw. Uncle Mike, how was the BBI today, and what was lighting up the old tape over there at RCM?
The forbidden fruit of Apple, I guess. I don't know. Yeah, today with Apple, it's kind of one of those things to where I'm back at the stage to where I'm throwing my hands up in the air and not complaining, basically. What I've been doing is just basically rolling up puts for the most part. I'm gonna have to roll them up again tomorrow. So it just it's a bitter pill, but someone's got to swallow it, I guess. So problems like that are always good problems to have. Just one of these things to where I'm curious to see going into the 7-for-1 split if just the utter excitement of Apple, it goes up to 700 and becomes a $100 stock before it was intended to become a $100 stock during the split. So I don't know at this point. Once again, I don't see any news has all been out in terms of what they've done. But the only reason that I can see it continuing to go up, which I think is a very good cause, is that, well, it's Apple.
Yeah, I've long since thrown my hands up in the air and stopped playing the why is it rallying game when it comes to Apple, because it could be any number of a myriad of things. It seems like this is just residual love from the potential for that stock split, but you never know with Apple. It could just be it's a Monday, time to rally 4% in Apple, so you don't really need much of a reason to move this thing 22 handles as it did today. Not surprisingly, Apple also lighting up the volume tapes. It's usually averaging around 400,000 or so contracts a day. We're doing nearly 2x that, nearly 800,000 contracts today. So Apple dominating the trading screens for most of the retail sector today, and rightfully so. All right, last but certainly not least, Mr. Meatball, you alluded it to it being kind of a weird day on the street today. Take us down that rabbit hole. What really caught your eye in this very weird day in the markets?
Let me first off by saying that when Apple goes to 700 to become a $100 stock, I'm going to laugh when it goes from 100 to 14 bucks. That'll be hilarious.
That would be interesting if that happened. I somehow don't think it will happen, but it would be interesting.
Hey, you know what? A lot of people never thought that, think about Sears, think about all these great companies that now suck, that are out of business, Kodak. So, anywho, yeah, really interesting day. We saw, we continue to see the Russell and the NASDAQ really leading the way. If you want to know what the market's going to do for the day, watch the Russell, watch the NASDAQ. We're not seeing any leadership out of the S&P. So the S&P is really being dragged along by these smaller indexes because, basically that's kind of the safety net. The other piece I would note is that, the one thing that I can tell you that is really unifying the winners versus the losers and the outperformers versus the underperformers is the dividend. Stocks that have a dividend, stocks that pay a nice dividend, are clear outperformers right now relative to ones that do not. And I think that's the key. So, right now, where the S&P was the leader for so long, we're now seeing the Russell and the NASDAQ lead us lower. And, I refuse to believe they're out of the woods until I see those vol spreads start to collapse, and they're not anywhere close to that. If you're really looking for the one index that's been really stable, it's actually, and this really goes to show you where the perceived risk is take a look at a chart of even the OEX versus the SPX and what the vol is doing there. And you get a clear idea of kind of where money is flowing right now.
Okay, I think to add to your point, Mark, about the dividend stocks, we have a small position in Chevron. They had a big day today too, and combining that with what you're saying about the bigger stocks are doing a lot for the indices, that's a huge thing. And the one thing that a lot of people, what we need to realize is that I said a lot of times in Q4 last year, there's never been a better time to sell any S&P holdings than right now, but we're still right around the same level. We're not that far off of all-time highs right now. We've pulled back a little bit, but don't get me wrong, I am the all-time constant hopeless bull. I get that, but we got to start making some new highs at some point because this choppiness going back and forth.
Yeah, I know. Well, until we see the NASDAQ and the Russell clear out, when you were saying when you were saying that in January, that was the time to dump the Russell. That was the time to dump anything. That was the time to dump biotechs, and the time to really dump a lot of the big momentum stocks. And so just because the S&P is at an all-time high, and all these other indexes are they're kind of threatening all-time highs, doesn't mean that there's not something to be sold. And when we start hitting these all-time highs consistently, it almost always makes sense to take the high beta stuff off at those points because they're always the first to drop, and we're seeing that right now.
Oh, it is, and then because you look at the Russell, we're almost 100 points off the high that the Russell put in late February. So I agree. The Russell has definitely been, as Tom Petty would put it, free falling.
All this talk about setting new highs and, of course, selling things at these highs. I'm just going to put it in now. We are recording this, listeners, on April 28th. I'm just going to put in the prohibition now. No one on this network for the next month, because we are approaching May, is allowed to say sell in May and go away. I'm just going to say it right now one time and one time only, and we will never hear it again on this network for the rest of the summer, hopefully. And if it does come up, I will certainly have it edited out. So there we go. April 28th, the kibosh is in on sell in May and go away.
Speaking of sell in May and go away, Russell had done over the weekend, put up a big analysis of how you can use like VXN futures, VIX futures, and RVX futures as opposed to actually going to cash. And you really do get a big positive expectancy out of it. So it was pretty smart and interesting stuff that he wrote up.
Talking Russell Rhodes or Russell Investments?
Russell Rhodes,
okay.
Not Russell Investments.
Yes, this seems to be a good time of the year to do that kind of analysis. It's going to get picked up in a few outlets when you throw it out there. It seems like every late April is whenever we see those studies coming out. Good for Russ. I'll have to check it out and see what he cooked up over there. A couple other things to hit on really quick before we dive on into the odd block that'll lighten up our tape from an options developments perspective. A lot of stuff happening in the tech side. Of course, we cover a lot of that on our Trading Tech Talk program. Tune in there to learn more about that. We won't go into all that detail, but a couple of things that are interesting from an options tech perspective that also feeds back into this program. You guys will remember last year there was a kind of surprising outage on OPRA last year, which is, of course, the Options Price Reporting Authority, something that had never really happened before, and it's the main market data source for the options business. And to see a failure in that feed was kind of alarming to a lot of people. So a lot of people are going back and forth behind the scenes to try to shore up that feed, get a few more people in charge of really handling the oversight of it. It seems like at least it's leaking out now. Nothing is official, but it looks like ICE, the other ISE, and of course a weird player, MIAX, the Miami Exchange, are going to be the three final candidates to come in there and oversee OPRA. Two of them make a lot of sense. MIAX, I don't know, that's an odd choice. I don't think anyone really knows what the heck's going on over there at MIAX. So interesting stuff nonetheless, and maybe a little bit more oversight will help prevent some of the more spectacular disruptions like we had last year when the underlyings were still trading and for whatever reason OPRA was down and the options weren't trading, which is of course a worst case scenario for a lot of options traders out there. So we'll stay on top of that one, see what happens. I'll, of course, be heading down to the OIC conference in this coming week, so I'll be able to get to the bottom of a lot more of that stuff when I talk to the heads of all those different exchanges down there. But still interesting stuff. A lot of people really got a wake-up call when that OPRA failure happened last year. Good to see that there's some developments on that front. In the meantime, we're going to keep on rolling right on into our next segment, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time once again for the Odd Block, the portion of the show where we break down the weird, the interesting, just downright unusual options activity we're seeing lighten up the tape. First up in the Odd Block today, a newcomer. This is Diebold Inc., ticker symbol DBD. Closing today, $39 even on the day, unched pretty much on the day. And this is the name that you might expect in the old Odd Block, doing about 700 contracts a day. Pretty heavy, actually, from an Odd Block perspective, doing nearly 5,000 today. And the bulk of that, about 3,700 coming in one big trade on one strike, the June 40 puts, to be precise. When we wrote this up this morning, we had about 3,500, looks like a total of about 3,700 went up on the day. And they were purchased for prices in between $2.25 and about $2.40 or so. Only one contract open on this strike, so this is all opening paper. It went up in some weird sizes. It wasn't like it was one big block trade. It really was various sizes throughout the day. So this could be one big underlying holder looking to hedge and doing a lot of small pieces. It could have been a newsletter trade looking to recommend this and spec on this. We didn't see any signs of stock going up with this, so it looks like, at least at the outset, this is what it appears to be, which is a straight up protective put purchase. The odd thing is these are a little bit meatier puts than you might see normally. These are $1 in the money puts. That's probably more to do with the fact that there's not a whole heck of a lot of strikes to play with out here. You got 5 handle strikes really, and that's about it. So they're picking the lesser of the two evils, going with the $1 in the money options here. Mr. Sebastian, what did you get from your, I know it's daily, your daily check-in here on Diebold, because this is an important name to you.
Chris Gilman, who's our head of research at Swan Wealth Advisors, has done a lot of analysis on kind of this type of trading. And I'm not sure when their earnings are or whether they just had earnings. But one of the things he's found is that when you see a lot of activity, not in the out of the monies, and this actually surprised me, not in the out of the monies, but in kind of the directly in the money, that can be one of the best signs that the stock's actually about to take a dive. Even more so than kind of the deep in the money or the kind of way out of the money. So, you know, when I look at something like that, it makes me wonder whether these guys are. Let me take a look here on earnings.
Yeah, actually, I just pulled it up. They're coming out tomorrow before the open, so this is definitely an earnings play.
You know, my guess is Mr. Earnings Call, not going to be the happiest phone call of Diebold Inc.'s life. Now, is that the lock company?
They are self-service delivery and security systems. So yeah, sounds like locks.
There you go. Self-service. You mean, yeah. So it makes me wonder whether there's something going on here. So
yeah,
that's just me.
Looks like the polar opposite of a lot of our insider quote unquote paper, which is usually upside calls. This guy coming in saying perhaps not looking too good on the call. It's going to be before the open tomorrow, listeners. So hopefully, if you are trading Diebold, you got your trades in because it's too late now. But interesting to see that guy loading up on some near-term in-the-money options. I tend to agree with Mr. Greasy Meatball there. That probably is not a good sign for the outcome there. Over at Diebold, we'll keep an eye on that one as well. Let you know how it comes out tomorrow while we move on to our next victim here in the old odd block. And this is RRC. This is Range Resources Corporation. They closed today 91.5, down about a quarter or so on the day. It's a name that does, about 2,600 contracts a day, doing about 11,000 today. And a lot of that coming from the fact that they have earnings coming out as we speak, actually. So they're ridiculously wide in the after hours right now as a result of that. And looks like we saw a weird, interesting spread going up, kind of the reversal again of what we typically see out there. Usually we'll see calls financed with puts. This seems to be the other way around. We saw a three-way going up out here, looking at the May 85.90 put spread going up about 3,000 times against the May 95 calls. All that done for about even. The open interest mostly pretty nominal on all the strikes, except for the calls. So it looks like someone coming in here, selling the calls to buy the puts, financing a little bit of a bearish risk reversal here, which is not exactly what we usually see. Usually we see it, like I said, the other way around. People looking to spec on the upside and selling some puts against it. This guy flipping the script. Again, they have earnings coming out, so this would probably seem to be linked to the earnings announcement. And if it's as we see, we didn't see any stock going up with this, so if it's as it looks here, this again seems to be leaning towards a perhaps less than positive result here for the RRC earnings call. We're still waiting on that number to come out, so maybe we'll have the answer by the end of this show. We'll see. Senior Sebastian, another heavy one. I know you guys watch all the time over there at the pit. What's your take here on this three-way in RRC?
I mean, it could be the guy like trying to get into the stock, trying to come up with a clever way to do that. I don't know, but yeah, you're right. Certainly doesn't bode well.
And it could be a close on those 95s. There are 3,000 open, but again, even if he's closing them, still doesn't bode well for the stock. So interesting stuff here in good old RRC. Hopefully we'll have that answer forthwith as the show continues. Meanwhile, we're going to keep on rolling onto our next name. No, it's not Nerf. Like the old Nerf footballs used to play with as a kid, even though that would be pretty fun. This is indeed Northstar Realty Finance, ticker symbol NRF or NERF. Closing today, $17.20, up about $1 and change, or about 7.5% on the day. This is the name that does about 10,000 contracts a day, doing some serious size today, doing 110,000 contracts to be precise. A lot of that coming in some pretty sizable buying here on a variety of strikes. When we highlighted on our site was a 5,000 lot of the June 16s being gobbled up for a variety of prices between $1.60 and about $2.15. A lot of open interest on that strike already, nearly 10,000 contracts. It looks like someone's adding to that number already. We also saw a couple of other blocks going up. Just a lot of volume in general in this name. We also saw people gobbling up the May 17s and the May 18s, pretty much straight up buys across the board. 22,000 of the May 17s going up, nearly 19,000 of the May 18s going up, all on pretty much nominal open interest, about 1,000 of the 17s and 0 of the 18s. All of this is indicative of some pretty heavy spec going into this potentially being a buyout candidate here. We did highlight last week on the site some buy rights going up in NRF. Looks like this guy maybe, who knows, maybe he's unwinding those and flipping the script and going long again. Probably some poorly timed buy rights if this is indeed a takeover candidate, where we're seeing the other side of that paper today, which is people just gobbling up pretty much any call they can get their hands on out here in Northstar Realty Finance Corp. Usually a sign that something is indeed afoot. Senior Sebastian, what's your take here on the less fun Nerf?
And you know, the rumor is the price is 20. I would say based on the volume that you're seeing, that sounds logical. But there's money to be made if they're right. And the fact that this is all this activities in May, and they've got earnings this week. I mean, there's all sorts of reasons to play around with this. Trade I kind of liked was like, some sort of time diagonal play or a short time spread.
I should also mention June 18 is going up about 15,000 times as well. So again, just any call they can get their hands on here, pretty much gobbling them up. Interesting stuff. We're definitely keeping an eye on this one. Earnings here on the 2nd. I'd imagine if there is some sort of takeover announcement, it probably will be happening or be announced before then. And it certainly seems like the paper we're seeing at least coincides with that potential $20 price target. All of these options would fare pretty well at that price range. All right, moving on to our final name here in the old block. This is Bank of America. Been a while since we talked about this one. Of course, ticker symbol BAC, closing today about $15 or so, even down about $1 on the day. This name, one of the heavier of the odd block candidates we've talked about in a while, doing about almost 300,000 contracts a day, doing over 1 million today. So a lot of paper coming in on Bank of America. What we're focusing on amongst that just explosion of paper is some puts lighting up the old tape, in particular a put spread. It was the Bank of America June 13-15 put spreads going up nearly 17,000 times on the day for about 38 cents open interest, 22,000 on the 13s, over 30,000 on the 15s, which is why it looks like this could probably be a roll down. Someone who had a sizable put position on the 15 strike, taking his profits off the table, rolling down to a little bit lower strike. Probably betting here that what we saw today is going to continue, a little bit of a pronounced sell-off here in Bank of America. So someone putting their money where their mouth is, taking some money off the table and then extending it again at a down lower strike, a little down and out roll here. Something we see quite frequently on the old odd block. Just a spitting into the wind when you got 1 million contracts going up on anything today. So interesting paper across the board there in the old odd block. Now it's time to close out that segment and keep on rolling right on into our next segment, the Xpress Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you know what time it is by now. This is, of course, the portion of the show where the Viceroy takes the reins and gives us a behind-the-scenes guided one-on-one tour into the realm known as Options Express by Charles Schwab. Mr. Viceroy, what was cooking? What was going on? What was lighting up the old tape over there at OX for our VIP tour, sir?
So, if I knew it was a VIP tour, I would have worn a tie. But we talked about this at the beginning of the show. We saw this continuing rotation out of momentum kind of into the more quality names. And I'm looking at the list of stuff that was hot today, and 3 of the names in the hub were standouts today. Obviously, Apple trading up back around the $600 level. Amazon with a little schizophrenia today, down into the low 290s, and then it popped about $5 towards the end of the day. Amazon always generates a lot of frenzy here as it trades through strikes, because there's lots of long-term believers here, and there are a handful of people who are doubtful about its long-term future. But 2 kind of old school names today traded quite a bit, both IBM and Microsoft, ironically, and some people refer to them as kind of old tech. Another name that got beaten up today was Baidu, which they just crushed today. So seeing a rotation away from traditional momentum back into kind of old technology. Apple's the exception there. Apple today was clearing away, acting contrary to what NASDAQ was doing. But it was a busy day today. But the rotation that both Mark and Mike talked about, and Mike showcased the appetite for dividends. I have to assume some of what was driving both IBM and Microsoft today. Was an interesting day. They let the air out of the market in early afternoon, and I think that brought a handful of buyers in. One of the names I was watching today was Amazon, and clearly it turned mid-afternoon. And say it was down about 11, 12, and only ended up down around 7. So it got a little bit of a trade lift in the afternoon, but lots of big moves today, which is always for the option trader, lots of opportunities. So interesting day overall.
All right. Thank you for that, Mr. Viceroy. And now we're going to keep on rolling right on into our next segment, the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, listeners, you know what time it is for this segment as well. This is, of course, the portion of the show where Uncle Mike puts on the old smoking jacket and takes the bubble pipe and the stone tablets down from the wall and proceeds to dispense some options wit. Occasionally, some wisdom is mixed in there as well. Sometimes he flips a script, goes all wisdom, a little bit of wit. He mixes it up every week. Uncle Mike, what do you have on tap for us today in the old strategy block?
Well, I'm going to try and do a little bit of both. I mean, I'm smoking the bubble pipe, so I guess I need to do one of those things. But I want to do a kind of a two-part strategy block today, if that's all right. The first part, I kind of want to go over what's going on in some of the positions with which I'm in right now. And also want to go into a strategy you may want to consider in a market like this if you are just a dyed-in-the-wool credit spreader, so to speak. First thing, I just want to kind of go through a few strategies with which I'm getting into right now. Just going down the list, Apple. Basically, what I'm doing is rolling up puts, folks. I want to just continue to be in the stock for the time being, but we've been here before. And Apple at some point is going to come down. But when we have 3.8% up days, it's difficult for the bears to make an argument for it. So with that, I really don't mind paying premium to protect profits. It's not a bad thing by any means. So that's the basic gist of what's going on with Apple right now. Doing a few different things across the board with it, but for the most part, just rolling up protective puts. Going down the list here of just some other bigger positions with which we have. Want to talk about some of the collar-esque positions with which we're doing. Now, this year, we haven't really been selling a lot of covered calls. Not to say that we haven't been, but it's not something that's been very common on the collars. We've just been setting aside additional monies to finance the put through selling verticals or doing horizontals in one way, shape, or form. But right now with GLD, we're long the underlying, and we're in the September 126 put. Went in the money a little bit. And so we're not quite at the point to where the Andrew Giovinazzi do stuff alarm clock has gone off as of yet, but it's one where we're getting a little bit closer, so to speak, and that we're still just long that put. And we sold a credit spread today on that one. We sold the May week 1 front week 124, 122 put spread as a means of financing it when it went on the dip. I've talked about on the show before, I typically don't like selling premium going into weekends, especially on the metals. Not to say that I never do, but it's generally something I prefer not to do because of the fact that I really don't like being in a position to where I'm out of control over the course of 72 hours like you are on a weekend. I don't mind missing one night of sleep and then not going to the bathroom for one day, but for 3 days when I can't do anything about it, come on, that would be ridiculous. So the other thing that I want to mention on there with GLD, a lot of times through our trading rules on selling the credit spreads, we can go up to 5 points as the differential between the short put and the long put. But today, I'm just looking at the 122s all the way down to the 119s, and I believe, I don't have it in front of me right now, but the differential in price was 10 cents from the 119s to the 122s. So with that, for 10 cents, I'm more than happy to get a little bit of extra protection in there because of the fact that you never know. It's not a bad price, so that's something with which felt comfortable doing. Last thing I want to talk about is with SPY right now. We're long the underlying in SPY. We're also long the June 174 put. And this has been the ultimate market of doing nothing so far. This has been a Seinfeld market, it kind of seems like, from a macro level in terms of doing nothing over the course of the last 4 months. So the 174 put really hasn't, it's just been sitting there decaying, but we've just been trying to sell premium against it as best we can, and we've been doing all right with it. But now we're at a stage to where we're long a calendar spread. Now, why are we using a calendar spread as a financing mechanism on a long put? Well, here's why. We wanted to get the delta differential in a certain way with which it made sense for the overall position. What we try and do, give me 1 second while I bring this up on my screen. There we go. Okay, naturally everything went off my screen, so I'm going to go without it. So what we're trying to do with the overall position is we're trying to establish approximately 70 long deltas with that pseudo collar position. And with it, with a volatility lower like it is right now, we prefer to use calendar spreads over diagonal spreads. And that's what we're doing right now in the financing world. Now, I want to talk about a trade for people who were tempted but just weren't quite able to pull the trigger on people who were watching the market all day when it was way down and wanted to maybe sell a bull put spread when the market was way down but just couldn't quite pull the trigger on doing so. I want to talk about how you can do that and still accomplish kind of what you're looking to accomplish, but not quite have the same kind of risk. It kind of shifts it a little bit. So let's say, for example, and we were talking about the Russell 2000. Let's just use that as an example. Low of the day on the Russell 2000 was 1102. And so let's say that maybe later, and at the end of the day, I'm showing at 1117. Let's say that during the day it comes up a little bit and you're thinking, okay, I'm not catching a falling knife. The Russell looks like it's starting to come back. I want to sell some puts on this. So let's say that perhaps you were looking at selling the 1100 put. Now, this isn't a recommendation by any means. I'm just kind of shooting from the hip here to give you an idea of it. I'm looking right now at the 1100 put. You can sell that for May week 2. Now, let's say, for example, that you wanted to do a next week, I should say, sell the May 1100 put, May week 2 1100 put, and then buy the May week 2 1080 put. I'm showing right now on my screen a $4.25 credit, and you're also getting a 10 in time. You're getting $10 a day in time decay. Delta is 13 deltas. Now, another alternative as to what you could have done with that, instead of using the current week as the hedge leg, go out a couple weeks. You can go out to, say, May week 4, the 1080 put, and you're not going to get as much of a credit. You're going to have a debit. You're going to be paying a debit of $1.45. However, look at the whole position. You actually have the ability then to collect almost three times the time decay, because I'm looking at my theta on my screen. It's coming out to 28. Delta isn't quite as much. It's at 6.5. It's not quite at 10 like it was, but you still get a decent chunk of it. And here's the best part of it. You actually have volatility on your side, theoretically. So with that being said, I do verticals, and I also do this trade that I'm describing. It just depends on which type of market you would want to do it in. But just in terms of looking at both of them, this is something that you may want to consider for your trading toolbox, because of the fact that if the market starts to go down, and you can do this in a 2-month, 4-month, 1-month, 3-month. You can look at the differentials all you want. The point is that on your Options Express account, when you're looking at it, just make sure you're looking at the position Greeks of it as you're kind of playing with this on the trade calculator. When doing this, in theory, as the market goes down, implied volatility, in theory, goes up. Once again, that's obviously not a guarantee, and we've talked about that on this show quite a bit. However, let's say that theory holds true, and the market goes down a little bit. Even though you have positive delta, volatility can help you in this trade if volatility starts to come up. No guarantees that it will, but it can. You're also getting more time decay. Now, here's the disadvantage. If the market just flies up to kingdom come, you got to monitor this and you have to get out of it before it goes up too high, because it's going to turn into a negative delta trade if it goes up too high, and you'll end up getting punished for being too right on a trade. So with that being said, something to consider if you are a credit spreader, take the hedge leg of your short spread and go out another couple weeks. And you might want to consider that if you're concerned and you want to do something, just kind of a little different trade. Play with it, folks. One to grow on.
All right. Thank you for that, Uncle Mike. And now, because we have a few minutes, we're going to keep on rolling right on into our next segment. Your segment. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, I know this is usually a Thursday thing, but we got so many questions coming in these days. I want to make sure we get to as many of them as we can. We'll do a quick one here today. A lot of people writing in about this particular topic recently because it's so much top of mind for a lot of people. We, of course, touched on it last week. We will do so again this week. This question comes in from Jason Kruse via Twitter, and he writes, has probably been asked and answered many times, and I've missed it. Will Apple minis continue to trade after the split? Again, the Apple split has a lot of people looking at the Apple minis and minis in general and kind of scratching their heads. We were doing some research into the minis earlier today. We found that they're averaging pretty much on a good day, like coming out of Apple earnings, about 11,000 contracts in a day. Now, remember, these are 1/10 size contracts, so that's really only about 1,100 real legitimate contracts. And that's not just for Apple, that's for all of the minis in aggregate. So Google, Amazon, GLD, Spy, and Apple minis combined net about 1,100 contracts, 11,000 contracts a day, or 1,100 real big size contracts. So not exactly lighting up the old tape from the volume perspective. They did a little bit better the day of Apple earnings and the day after. Of course, that's a scenario they were designed for. But aside from that, Apple minis and all minis really are kind of struggling to get a foothold in the marketplace for the many different reasons we've discussed here on this show in the past. We won't go into that again. But getting back to this question here from Jason, and a lot of you guys are writing in with similar questions. Yes, the answer is yes. They will continue to trade. I haven't seen anything from anyone saying that they're going to delist the minis, although, like your question kind of implies, once Apple splits, it raises the question of why. Why do we need this contract? It already isn't really lighting up the tape anymore. It was conceived in an era when Apple was trading $700. It was pushing $800, and people looked like it was going to the moon. It was going to be north of $1,000 pretty soon. It seemed like the ideal time for a smaller, bite-sized type Apple contract. Fast forward a few years, Apple's come off a little bit, of course, last few sessions notwithstanding, and the need has kind of gone away a little bit on top of all the other issues we mentioned, commissions, spreads, etc. So, yes, they will keep trading, but as we said last episode, kind of makes you wonder if this will be the kiss of death for the minis in general. Alex, I know this is a pretty popular topic for you. You pay attention to the minis a lot over there at OX. What's your take on minis volume post-Apple split?
Well, obviously, the existing open interest will adjust and continue to trade. The real question is, and I think we're both going there, is will they start to list new minis post-split? And although I don't know the answer, I suspect you will hear a lot about this down in Texas. But I think the minis have got a stopwatch on new ones, and we would not be surprised, sounds like I'm hedging, which I am, that they just won't list new series going forward. I mean, it just hasn't worked.
Yeah, I like the concept of the minis, but yeah, like what you guys are saying, it doesn't make sense as a bigger business thing. So I was just one small thing. I have one client with which we have a pretty large amount of assets of his. And he has like this one smaller account that he just wanted to have some gold in. And just for a longer term holding, what we're doing with GLD is we have 80 shares of GLD, and I have an 8-lot long-term collar on it for several months out. Not intended to do any active trading on it. It's just kind of this is a set it and forget it collar, in that that's what we're doing on it. and it's a nice tool to have, but I can see why they didn't last because of the because RCM has over $100 million of AUM, and I think those are the only 8 contracts with which we're using right now for the minis. So I can see why, but I don't know, it would be nice in certain odd situations with which we could use it.
Yeah, it's a shame. It was a good idea. A lot of interest, a lot of industry interest behind it. The exchanges were excited. Seems like the brokerage firms and the trading firms were all excited, and then they listed, and all that excitement kind of went away. The exchanges didn't cut their fees, their exchange fees, so that, of course, filtered through to the brokers who were charging full freight, and on top of that, the market makers didn't want to touch these things with a 10-foot pole, so the spreads were wide. So it was kind of just a disaster from the beginning. I don't really see much incentive to list new names. The fact that we haven't seen any new additions to the 5 initial classes probably should tell you all you need to know. So hopefully that answers your question, Mr. Jason. Yes, but a very tepid yes post Apple split. All right, that's going to do it for the mail block, and now we're going to keep on rolling right on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. This is, of course, the portion of the program where we break down what's coming down the pike. A lot of stuff coming down the pike this week. We, of course, have some more economic news coming out this week. FOMC two-day meeting coming in on Tuesday and Wednesday later this week. We got home sales and the Dallas Fed numbers, but of course, a lot of people on the economic calendar focusing on Friday when we have the non-farms coming in again. We'll see if those give a little bit of a lift to vol in the marketplace, or if, like they have in the last few announcements, kind of really been a bit of a meh. The market kind of shrugs them off, even going into the number, not really bidding up much of anything. So we'll see how that plays out towards the end of this week. We also still have some earnings on the calendar. It's not all done yet. We have some big names a lot of you guys like to follow still coming out, like Twitter coming out tomorrow, the 29th. We also have Marriott coming out tomorrow. We got CME coming out on the 1st before the open, and LinkedIn, another big social media name, coming out on the 1st as well. So still, for those of you out there who like to play the social media and the tech names, a few names to pay attention to. What else is catching your eye? Starting off with you, Uncle Mike. What are you watching for the rest of this week, sir?
Apple 600. I want to see if it can climb the hurdle. That's probably the main thing with which I'm watching. And yeah, you pretty much said everything there that we're looking at in terms of the FOMC meeting and all the other announcements with which you mentioned. But the only other one with which I'm watching, want to see if Apple can clear the next hurdle of 600. They broke the 52-week high today at over the 575 mark pretty easily. And next stop, 600 or 100. We'll see.
All right, riddle me this one then, sir, because your clientele forms the basis for my gauging of sentiment there in Apple. Now that we've had a couple of run-ups, are you starting to get those calls again from the client saying, hey, why are you wasting my money with hedges? Have you hit that point yet, or is it not yet there?
We'll see. I have one scheduled right after this show. I'll be able to let you know on the next show.
There you go. Maybe I've given you some advance warning of what that call will be about, sir.
I'm sure you have. It's nothing I haven't heard before, whatever it will be.
All right. And Mr. Viceroy, what are you watching for the rest of this week, sir?
This rotation on a momentum, watching to see if it continues and money continues to come out of the auto zones, the price lines, the Netflixes, the wins, all the stuff that was the darling of the momentum players. And that money today was going into, old line tech. It was going into the oils. It was going into the dividend plays. We'll see if that rotation continues. Still, I'm in disbelief that the 10-year is down in the 270 area. At some point, that's going to pick up, and I think that'll be the big news driving the market when that occurs. Earnings season was kind of uninteresting, and as you pointed out, Mark, so far all the economic data we get hasn't really had a big impact. Now, as soon as you say that, you say, but we're going to get some number on one day that's either going to be such a surprise or such a disappointment that it will be the catalyst, the turning point. That may happen, but right now the market just seems to be in this kind of complacent trading range, bouncing off news. Some spark will become the catalyst that changes that, and I think we're going to trade higher this year, but I don't know what that spark will be. But, keeping an eye on.
All right, and last but not least, Mr. Meatball, what are you watching over there at Swan and or the Pit?
Oh, a couple of things. We at Swan, we continue to be working on all our new projects. I'm doing some write-ups on some really cool stuff that we're coming out with. We've been spending the day trading around these events. I think point proven, every time the VIX starts to threaten that 13 level in the last couple months, it's been volatility has been a purchase until, as Alex just said, until we see the RUT and the NASDAQ kind of calm down relative to the VIX. I think that's going to be the way it is. At Option Pit, we're soft launching our chat service this week. We're going to hard launch in probably about 2 weeks. So at that point, that's when we're going to adjust all of our pricing. So if you have some interest in Option Pit Live and the Gold Course and stuff like that, and you want to get in to the chat service before I jack up prices 100%, now would be the time to do it.
Mark kind of beat me into the plug portion of the show, so we'll just wrap it up there. That is going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as I am wont to do, I like to check in with each of my cohorts here on the old All-Star panel, see what they have coming down the pike that may interest you. As Mark already said, some pricing changes in the works there over there at Option Pit. So if you want to check that out, surf on over to optionpit.com and check out that new chat service they have cooking up while you're at it. Mr. Tusaw, Uncle Mike, if you will, what's coming down the pike in the old RCM webinar? Choo-choo.
All right. Well, on Tuesday, May 6th, I'm going to be a guest speaker for Trader Planet, and I'll be doing a webinar on weekly options. So for more info on that, go to www.rcmwealthadvisors.com/webinar.
And Mr. Viceroy, take us home. What's coming down the pike at OX by Charles Schwab?
Big live event we had this last Saturday, Jimmy Rouzan and his crew, and big virtual participation. That's really curious now that you can participate in these live events while sitting home with your hot chocolate and slippers on the site. Next live event, May 10th, Midtown, New York City, always a great event. Obviously, with the number of traders in New York, you get big numbers. Couple webinars. Wednesday, Nina's going to be doing a trading platform and site tour. After that, she's going to be doing her series of risk gauges. And Wednesday's topic is talking about theta. Thursday, also part of the ongoing series, Nina's going to do option terminology. Just come to optionsexpress.com. You don't need to have an account to participate in any of the educational events. Just click on the Educate tab and register.
Sounds good, sir. All right. And on behalf of Alex and Uncle Mike and Mark and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and, of course, for writing in with such great questions. Keep them coming. We'll spend more time in the mailbag on Thursday, I promise. And, of course, we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.